Well, as investors return their focus to the Fed, how will today's closely watched inflation data impact the Fed's next move and the market going forward? Our next guest expects a 25 basis point cut from the Fed at the September meeting. Joining us is David Smith. He's Chief Investment Officer at Rockland Trust Investment Management Group. Okay, David, good to see you. So you expect this cut, but overall, my question is, can the market overall kind of stay this expensive, relatively speaking, and keep getting over these freakouts?
You know, it'd be interesting. First of all, happy Labor Day weekend to both of you. It'd be very interesting to see how the market reacts to the 25 basis points. We are pretty confident, obviously, like most market participants are at this point in time, that we're going to see a rate cut, and I think it's 25 basis points. I'm actually a little concerned if they did something more aggressive and moved as much as 50 basis points, because I'm concerned that the market participants may view that as the Fed seeing something scary in their economic data and then moving aggressively to get in front of that. So I think 25 basis points is pretty well on the cards at this point, and I would expect that that will be the first in probably a series of 25 basis point moves as we progress through the rest of 2024 and into 2025, probably settling out in that low 3% range sometime at the end of 2025.
David, next sort of big data point for the Fed, it may not matter for the September meeting, but it could matter further out, is the non-farm payrolls that we're going to be getting next week. What do you think we're going to see there? What would make a difference to the Fed's outlook?
Yeah, I don't, like you said, Deirdre, I don't think it's going to have a real effect. I think they've pretty much telegraphed they're going to move 25 basis points. I think that may have broader implications for the next meeting and whether or not they'll move incrementally at the next meeting or maybe skip a meeting and make a move in the following meeting. So the September 18th, I think, is pretty well baked at this point in time. They'll continue to monitor data, the jobs data, the economic data. Obviously, today's PCE was a positive number, I think, at 2.5%. So there's lots of data flowing between now and the next meeting. And I think that will be taken into account as they assess kind of how they're going to move going forward. The only way that may impact the 18th is on the language coming out of the meeting and what Fed Chair Powell says about what they're going to do at the next meeting.
Oh, David, it just feels weird to keep looking back and forth over our shoulder at the Fed, right, as investors try to figure out what stocks are going to do. So I guess at what point do you think the focus can go back onto fundamentals and the question of whether the overall economic health, demand, the consumer strength perhaps, is such that you can trust that companies are going to be able to continue to do well?
John, great question. It feels like we've been focused on the Fed now for the better part of a couple of 3 years. And I don't know when we're going to get out of this. I suppose if we get to a rate environment that is neither aggressive or contracting, that we'll probably be at a point where then we can just look and sort of say, status quo, the economy is going to do what it's going to do. But for now, the Fed has been very aggressive, moving interest rates up to get inflation under control. That was a shock to the system. And I think they're going to begin to get into a pattern of reducing rates. I don't know how aggressively, but we'll be in a period of time now where rates will be coming down. If I'm correct, and then by the end of 2025, we sort of land at that 3% range, and the economy is chugging along at the 3%, 2% range that it's at right now, I think then we'll be able to focus on fundamentals with the expectation that the Fed's sort of out of the game. But that's to be determined. Obviously, we'll see how things play out.